Hello, I'm Greg Bennell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, U.S. markets are down following a bit of a bounce yesterday. Trade tensions are back front and center. Plus, earnings season is here. The big U.S. banks kick things off, and they're stirring. And our trader debaters are standing by. They got the bull and bear cases for Taiwan Semiconductor. Who's got the stronger case? Stay with us. That's all ahead. And don't forget to like and subscribe. You're watching TD Active Trader Live. Half an hour of trading under our belts. Let's check on the S&P 500. We do have a resumption of the down selling on the markets. You can see the fall off there at the open. What's going on? Trade tensions, of course, they stirred near the end of last week, heading into what was our long weekend. This is the U.S. and China. They're now charging each other additional port fees on their shipping firms, moving stuff back and forth from each country. A small measure, but still, it just sort of shows you what's happening there in terms of the tone. Although there were some mixed signals over the weekend from the president himself. He was the one who threatened steep tariffs on Friday, and the weekend said it was going to be all right. The markets are trying to work all through it. Let's check on the heat map, though. A lot of the downward pressure today is being focused on some of the big tech names that have really carried this market for quite some time. I'm looking at names like NVIDIA, some of the other chip makers. I don't know if we're stuck on the S&P 500 here, but no, here we are. NVIDIA down 4%. We got Apple, Oracle, Microsoft, Google. I'll throw any big tech name at you. Amazon and Meta, we're all trading down. Broadcom down almost 4.5%. That is definitely weighing on that top line number. JP Morgan, we got another earnings season on our hand. You turn around and bang, here we are again. Some pretty solid numbers. Topping analyst estimates for the third quarter, trading and investment banking generated $700 million more revenue than they expected. That trading revenue hit that record, as you can see at the bottom of the screen, $9 billion. Apparently not good enough. The stock's down today. Overall revenue was $47.12 billion. Perhaps it's a little bit more of the broader market sentiment or some concerns about what lies ahead for the U.S. economy. And General Motors, in the pre-market, the stock was under pressure, but it seems to be sort of clawing its way back to break even. Third quarter results don't show up until next week, but they are warning us that's going to include a $1.6 billion hit from its all-electric vehicle plans. Not really playing out as anticipated. So this is GM's EV story. Of course, its rival Ford, while ago, announced a $1.9 billion impact from changing its EV plans. So shifting, I guess, priorities among the big automakers. And that's your market update. Joining us now for more technical take on what is happening in the markets here in Amin, Brian Rogers, special sit-in guest from our direct investing educational team. Great to have you guys with us. Great to have you filling in, Brian. It's always fun. What do we got in our radars? What are we taking a look at?
Hey, Greg, great to be back again. We're looking at the banks, of course. You cued me off with your opening there. So the one I'm going to be squarely focused on is the ticker is BANK. It's the NASDAQ Bank Index. Essentially, this really covers 250 securities, or banks, I should say, that are listed on the NASDAQ exchange that are classified as banks. So they're broad ranging from financial services, retail banking, loans, and money transmissions as well. Now, the reason we wanted to look at this is because we're now into the third quarter earnings season. That traditionally is obviously led by the banks. Of course, we had the big ones come out today, JP Morgan, Goldman Sachs, amongst some of those reporting. What I wanted to focus on is that the financial sector, 65% of the S&P 500 are scheduled to report earnings for the third quarter over this period as part of this sector. So it's a pretty bulky amount that they cover. And U.S. banks have been buoyed up. Like coming into this third quarter, we've seen a wave of deal activity happening. So we're talking about when you talk about M&A activity, we talk about capital markets. Like you mentioned, JP Morgan had an outsized $700 million profitability on the capital, activity that they had. So what the expectation is coming into this fact set says, the earnings growth rate is going to be projected at about 9% into this quarter here. And then we should also see that upbeat also with net interest margin expansion as well, along with fee-based business that will be driving those revenues. Here's how this index has formed, though. We're looking at the chart right now, and I'm going back to the April lows. We obviously we formed this uptrend, but then hitting into September, we've started going into this short-term downtrend. Now, wherever you see the intersection of these two trends, you have what's known as a confluence of a price action that's taking place, and it's broken down below. It's remaining below that short-term downtrend at the moment, but it's also broken what was what used to be support previously at this 4,400 level on the index is now going to act as overhead resistance now. So coming into this earnings, it's going to be interesting over at least this week and into heading into next week how the price action shifts up. So we want to see a break above that 4,400 level if it can, and then also cross above that short-term downtrend to resume back onto its path that we have over here. A lot will be coming to be said, but there's at least high expectations, of course, with the financials.
Right, so that's the banks, of course, these trade tensions flaring up again. It's really about that critical minerals trade, the U.S. feeling perhaps that China's been unfair on that front, but it might be pressuring the broader markets. They really got some of those rare earth metal stocks moving. Yeah, that's right. Yeah, so we're talking about the ticker we've got pulled up, in fact, participates into that. And if you want to get exposure into rare earth metals and strategic metals, REMX is what we're looking at. This is the VanEck ETF that we have over here. Rare earth metals, of course. So these are just a subset of critical metals that are crucial for U.S. weapons, platforms, robotics, electric vehicles, green, you name it, they're pretty much embedded across the board there. Now, as you mentioned, Greg, China dominates in this space. They control 69% of global mining. But the true leverage lies in their processing, which commands 90% of production and manufacturing. So there's a good reason why they want to kind of reduce the dependency on China, of course. And that's where this tit for tat started happening on Friday, of course, then a clawback onto it Monday. But what we have now, in fact, is just to give you a scope of how much dependency there is. The U.S. government has been investing heavily in this space as well. We've known that they're notably taking equity stakes in certain mining companies. The one we're looking at, one of the big holdings, is a company called MP Materials. This company it's the biggest one in the Western Hemisphere, the largest rare earth producer in the Western Hemisphere. They make key components of magnets that end up in high-tech products like EVs and F-35 fighter jets, which require around like 900 pounds of rare earth elements. And the U.S. government has just taken a stake in them. There's another company called USAR, which they're in talks of doing as well. But what we've seen in the charts, if we look at the price action right now, a long-term downtrend. I've got the weekly price chart pulled up here, so this is weekly candles we're looking at. And just at this summer, in June, we had the inflection point. You can see previously on the weekly, this is why this chart is so strong, is we've seen major rejections happen on the weekly candle. It hasn't been able to break and confirm. And what we want to see with a break and confirm is break the trend and confirm with another, at least 2 candles that are forming a higher high, which we haven't had until now. We had the break, we had the confirmation, and we made higher high subsequently. We're in this new sort of uptrend now that's forming over here, and it is respecting this, kind of on its pathway to hit this 88 to 90 level right now. If we can get there, that'll be kind of the next barrier. We might see some sort of a break from this rally that's been forming over here. On the downside, we've got 55 level. That's going to be a key as a support if we do see any pullback from this. But the way the things are shaping out, at least these are still being resilient amidst the tit for tat that's happening so far across That's the banks. We got the rare earths. Brian's taking us to the skies.
Yes, absolutely, Greg. I'm going from below the surface to above with looking at Delta Airlines. And it was in the news late last week with an earnings beat and an upbeat outlook for the fourth quarter. So, I don't know do you know what the largest travel day of the year is in the U.S.?
Well, in the States, it's Thanksgiving, right? They go all over that country.
All over the place, yeah. So that's, I think, part of the actual forecast. So their third quarter adjusted earnings per share was up 14%, and operating revenue was higher by 4%. But the bigger story was that the market overall that they reacted to was that their CEO was saying that the sales trends have accelerated across all geographies and in every advanced purchase window. So positioning Delta, to potentially finish really strong, not only with Thanksgiving, but just in general for the flights are coming up a lot more. So if we jump into the charts here, I just wanted to show more recently. So if we look, here's a 50-day moving average cross just prior to earnings. And you can see it did jump up quite a bit. Then it came back down. It sort of came back down to the mean again. So it looks like it went to those mean levels. But if we look again as well, there is a continuation wedge that you see that it did cross over. And that's usually a really strong indication of it, the trend reversal. So that little bit of that lower trend happening just before earnings, it kind of adjusted. The market seemed to adjust after earnings as well. But I think there is that possibility coming up to the next earnings in 3 months that with all this additional traffic and a really, really good earnings report, that we could have it potentially soaring even further. So, or it could come back to lower altitude. So I had to throw those airline puns
Nice
in there.
poetry there, Brian.
Yeah, apparently it's like the first class, and then like the spruced up economy that's doing well. So it's nice to have money, right?
Yeah, absolutely.
We're here to talk about money, though, in the markets. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It'll take you to our TD Active Trader Live website where you can try out the platform risk-free. Just open a practice account by clicking on that Try TD Active Trader button. Then when you're ready to switch to a live account, all you got to do is export your workspace and start trading for real. It is time now for Trading Debating. This week, the stock in the spotlight is Taiwan Semiconductor. This is the world's leading chip maker, powering everything from smartphones to artificial intelligence. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible. So it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to the stock of the hour, Taiwan Semiconductor. What made you guys pick this one to debate here?
Taiwan Semiconductor is the largest contract chip maker in the world. And most advanced technologies, whether that's Apple smartphones or NVIDIA GPUs, they use them. So they're master chip production. And when you've got the chips, sometimes you've just got to go all in.
All right, what are you saying? What are you saying, Brian?
Yeah, I know a lot of what Hiran just said as well. Like it's such an interesting market because all we're hearing about is AI, right? So with NVIDIA's made deals with all kinds of chip makers, Intel and things like that. So TSM is one of the big players in the game that's been around for a long time. So it was one that we thought we'd definitely take a look at.
All right, we got lots to dig in on. We'll get some time on the clock. You each get your 2.5 minutes to make your case, the bear and the bull. As always, we draw from the hat, trying to figure out who's going to be who. And Brian, drum roll, please. He's got the bear case. So why don't you kick things off for us?
Okay. So this was a tough one. This is a tough one because we know that TSM is such a big player in that market and a huge market as well. I kind of liken it to, Greg, like, if you have an A+ student, a kid that's been coming home every quarter or whatever you get your report cards these days. I don't know how often it is. But if they're getting A+ all the time, if they come home with an A or an A-, parents are going to be mad, right?
Yeah.
They're going to react. In this case, the parents could be the markets. The markets are going to react if anything comes in with a little bit of weakness. And I've got 3 things that I think could be concerns from Taiwan Semiconductor, potential owners or those that own it already, is geopolitical concerns. We talked about it even earlier on in the show, the fact that even today, China and U.S. Political tensions are there. So that's something that I think it could go into the price of the stock, if there are concerns where there's 90% of the TSM's advanced semiconductor production is in Taiwan. So if tensions are in that area, then that could, possibly have a price discount due to that. The other thing is CapEx spending is at record highs, so they're spending tons and tons of money. It's been over $30 billion annually for quite a while because they're starting to do fabrication in the U.S. and Japan. And so that could be an issue. And at the same time, the reason that could be an issue is lower margins. Lower margins are leading potentially to less cash. So any disruption in pricing or anything like that with any of their key buyers could cause an issue. And then also the customer dependence, like I just said, on the buyers. They rely highly on only a few big, huge customers. So if they're getting any renegotiation of prices and things like that, that could cause an impact for sure.
All right, less than a minute.
Oh yeah. So if we let's jump into the charts. We'll look at the charts. If we see here, there's an engulfing line bearish. So there's just a couple signals recently that are meaning, it's been at all-time highs. So there's, I think, coming off of the all-time highs. You can see that here. Whenever you have a really big candle that I've highlighted that's engulfed the whole candle from the previous day, that if it's in an upward direction, you can start to see there was a little bit of weakness of it coming down. And then there's a few other things we have, like if we have right here, there's an inside bar. That's another small, bearish actual indicator. And then right here, if we look at the Bollinger Band and the RSI, let me actually add these on here. I have to add the indicators themselves on as well. But if you can see here, it did go through the upper band. That's what usually this indicates right here on a Bollinger Band. And you can see RSI, which is the relative strength index. Whenever it's really, really high, could mean it's overbought and it's kind of starting to slide in the other direction.
All right. Nicely laid out case there. What would a bull say?
All right. I'm going to start by saying this, Greg. If the global tech industry were a human body, TSMC would be the beating heart. Without it, the world flatlines. You got no iPhones, you've got no AI chips, no cars that can parallel park better than you can. And me, of course, in this case. Let's talk about the market dominance. They're the backbone of the AI economy. They command roughly 67% of the global foundry market and over 90% of the advanced chips below 5 nanometers. So these are chips that power AI models, iPhones, NVIDIA GPUs, of course, and it's the preferred manufacturer for high performance and custom AI accelerators and GPUs. But the other thing that I also wanted to mention was, Jensen Huang, which we all know, he's the CEO of NVIDIA. I just wanted to quote him, what he thinks of TSM. He says, I think TSM is one of the greatest companies in the history of humanity. You can't overstate the magic that is TSMC. Okay, so if you're not going to take it from me, take it from someone.
He's a fanboy.
Okay, all right. And the other thing I want to talk about is the growth catalyst. When you talk about the golden age of silicon, without TSM, Silicon Valley would just be a valley. So every ChatGPT prompt, every Tesla autopilot, every data center GPU, all roads lead to TSM's fab. So when you think about a strong moat, it's a powerful lead in its 3 nanometers and 2 nanometer chip productions would leave it significantly ahead of competitors. Now I had to think about myself, what is the scale of these sizing? Just for context, the coronavirus is 50 nanometers. We're talking about
smaller than a virus.
It's smaller than a virus, 3 and 2 nanometers. Wow. And not only that, they are also building production into 2 nanometers by late 2025. That's going to improve the power efficiency and performance. And they're going into mass production of 1.4 nanometers. That's slated for 2028, which is going to further improve by 10 to 15% of higher speeds and 25 to 30% on lower energy consumption.
You got 40 nanometers left.
Let's use them wisely then. Let's go into the charts here because I just want to show one chart. I've got the daily chart pulled up. And what we're seeing with the price action, of course, starting from 2025 after the April lows, it started this strong upward trajectory. Now, what I've actually got is a regression channel over here. What a regression channel shows us is whenever it's trading above sort of the linear regression line, which is in white over here, it's usually bullish in nature there. Now, we're seeing that trading above that in this green space. There's a few things that are also confirming the moves that are still indicating to me that we could see a push higher. We got the bullish pennant flag, which is going to promote that it's going to break through this next resistance level there.
They took away your chart. They got wise to you guys in the last little while. It's like, if we take away his chart, he has to stop talking. You can get back into the charts because we got 3 minutes to counter back and forth. You guys are wide open to get into the platform as much as you want, Brian.
All right, you were bringing out some big guns on the macro level there for sure. So I would say, as a rebuttal, the capital expenditures is still a big thing. The fact that they are investing a ton of money, which is amazing. It is good that they are investing into fabrication plants, but that's taken away from their margins. As an example, right now gross margins declined slightly in the most recent earnings report due to the overseas fabrication and forex rates as well. Foreign exchange rates could cause an issue as well. But that combined, it's a very small amount. Like it went from 58% down to 56%. But when you're creating chips on that level, that volume is just amazing. So if margins are dropping a little bit, that could be seen in the market as something that could be a chink in their armor.
Yeah, but you make a point, Brian. So you're talking about gross margin sitting at 53%. Yes, you're going to have a few, basis points movements here and there because of the expenditure. And it's to your point that you made. You said China is a big threat to obviously them escalating a war out there, but they're getting in front of it because the new fabs are precisely to counter that. They've got it in the United States, 5 fabrication plants that are scheduled to be built. I think they're on the 3rd one right now in Phoenix, Arizona. They're building I think they call it a giga cluster fab is what they're trying to do, like an entire campus of it, like probably the size of a small town. Japan, Germany are also another one specifically for their geopolitical risk mitigation and single region exposure. Now, when you think about this, they're also a key beneficiary because we talk about the CHIPS Act that came out earlier this year. The U.S. government, in fact, they awarded them $6.6 billion in direct funding to build these chips.
Yeah, but they also invested $5 billion into Intel, one of the main competitors of TSM. So if we're going
I was waiting for you to bring up Intel. All right. So let me talk about Intel. So, and here's, I'm a fan of Formula One, Brian, right? So if TSM is a Formula One car, Samsung basically, because you might bring up Samsung, it's still trying to get its wheels on. And Intel, it just hired a pit crew, okay? So this is just to give you a scale of where they are in terms of how much catch-up they've got to do with TSM. The other thing is, you mentioned Intel as well. Everyone wants to be a TSM, and if Intel can't do that, they want to partner with them. And they tried to partner with TSM initially earlier in this year, and I think there's talks to try and do it again. But it's obviously
but going back to Formula One, everybody's trying to get in first place, right? It changes every year. We have a different person in the pole position all the time. And if we go back to the customers, their customers, over 40% of their revenue is only coming from 3 customers. Apple, 25%, NVIDIA, 11%, AMD was 7%.
And China, don't forget China.
Well, and
China makes
China as well,
part of
SMIC and all that. But if they try to negotiate, much lower prices, I think that's going to hit the wallet.
Well, I mean, they have pricing power, right? If there's one person, if all of these companies want to get just TSM's chips, they're going to have pricing power over them, no matter what. Yeah. No one can operate the scale. Samsung doesn't do it as the size as TSM does, and Intel's nowhere near them production-wise.
All right, nice spirited countering back and forth. We've laid out the cases here. So we're going to jump into the platform and take you through possible ways to play it in options trades if you were a bear.
Okay. All right, yeah. So I get the pole position on doing the trade.
There you go.
All right. So because here makes a lot of really great points because it does have those fundamentals. When I looked into the fundamentals, Greg, there's not a lot there that it does have solid fundamentals. So there are these things that are potentially going to be forecast into pricing like margins, and if they have an earnings that's not as great as the market wants, then that could tip the scales a little bit onto the downward side. So if I jump into the platform, I'm going to show on the chart first just what trade I'm actually doing. You can see I'd be looking to do a short iron butterfly. So this is a trade that's typically kind of reserved for more neutral movements. And I think what's going to happen is, potentially could happen, is the fact that, if it does drop down after earnings to around about 290, you can see this green line, I am going to end up selling a call and selling a put, at that same price, at the 290 price. But just for protection on the high side, if it does take off, then I'm going to be basically buying a $310 call, you can see up here, and then also buying a $270 put. So I've got them labeled, but I think it kind of stretched it out here. Let me move it like that. There we go. There, you can see that a little bit better. And if we look at the trade down at the bottom here, what it's actually giving you, it's giving you a really great premium. So I'm selling for about $14.55, and this is a $20 spread essentially on both sides, where you're getting that credit 2 times in the middle, where we see the green line. And then, if I actually just go confirm and send, if I were to place this trade, you can see, I know it's kind of small, so I'll explain it, but you can see the maximum profit, it's roughly around $1,500. So you're getting $1,500 on this trade, Greg, where the maximum risk is $20, so it'd be $20 total. So if you take off that premium, you're only risking about $450 if it does go big time in one direction or the other. But I'm kind of at this point thinking that if it does level off to around that 290, 280 range, then I could keep most of that premium on this trade.
But $450 is what you stand to lose if this strategy doesn't work out for you.
Yes.
Okay.
Yeah.
So we know the risk on that one as well. What about a bull side?
All right, so if you're doing a bull trade on this one could consider looking at the charts first, Greg. I just wanted to look at the pattern formation leading into this year, and we've got this big rectangular pattern. It's almost forming what's known as the double top, where it's being rejected at this key level. But we see that again in the summer we had a breakout of this. So just to figure out potentially, where could the stock go to? And usually when you see a pattern such as this, you take the base to the top and measure it. And this is implying about roughly a move of getting towards $320 here. So earnings is coming up, of course, on Thursday. Now, with that in mind and looking for something with a directional play, given where the stock is right now trading at 296, one could choose to do a long call condor strategy. Now, the reason I want to go directional on this one is a couple of things. One is when you think about implied volatility, it's kind of compared to its historical volatility, it's low. It's sitting in the 39th percentile, which means there's still possibly room for it to go up as we head into, even just beyond the earnings. And second of all, that also means that the options will tend to be more reasonably priced. So now the reason why we've got this long call condor, what it essentially is, it's comprised of 4 legs. So it's a debit spread that we're doing. So we're buying a $300 strike call, selling the 320. So in this case, we've got a $20 width between that. And then further from that, we're selling the 330 and buying the 350, again, 20-point width. What this additional selling does is it just gives us more premium to reduce our overall cost. So this trade right now, obviously the markets are in rough at the open this morning. We're looking to get in at a $4 premium, which would mean we're spending $400 in a single contract to play this directional move. And in terms of profit-wise, we want it to move directionally. We want it to get at least to 320 to get max profit. If that happens, we stand to make $1,600 on this trade. I know you like asking the question.
Exactly. Max loss, you put it in the box for me now too. You're being very helpful these days.
You can see it right
here.
there, yeah. So that's obviously going to happen is if the stock remains below this $300 strike over here. So if it doesn't go there, we lose the 400. The other case that could happen if it just has an outsized move and it blows past the 350 on the top side, then we'll also lose the 400 just because the spread will be fully in the money on the other side that we don't want it to get to.
Interesting stuff, guys. Thanks for that. Thanks for laying out the bull and bear cases for Taiwan Semiconductor. Just a reminder to our viewers that this debate was for educational purposes and does not reflect our personal opinions about the stock. Now, Brian, before we move on, you're going to elaborate on some of those drawings you were doing there on the charts.
Yeah. So normally we like to educate people on something we do in the platform. And if I jump onto the platform here, you can see what I did Delta Airlines. You notice I had that continuation wedge. I just wanted to show people how you can draw something like that. There is these icons on the left-hand side. This is like a drawing tray that's available. And you can actually hide all the drawings all at once. So that's one of the things I like to show at first is this little eyeball down on the bottom left. I can hide them all, and then they disappear. So, if you're looking to say, it's kind of crowding my chart, I don't want to see that any longer, you can hide it. But you can bring them all back. Up on the top here, you have this section where it's a layers, is what it's called. And you can see these are all the drawings that I've added on at one point. And if I want to add them back, I just have to click. There's a little eyeball that I would be able to click, like, if I do this moving average cross. I don't think we can see it right now because I'm on a different time frame. But if we wanted to add some more here, actually, let me go back to like a lower time frame chart. So we should be able to see it there. If I add this on, once I click the eyeball, I'll click this one on here. Oh, these ones don't seem to come back on.
They're shy.
They might be hidden.
Yeah.
Oh, it's because I hid them all. I did. I made a mistake. I hid them all already.
There.
Yeah, I got it. Yeah, don't make my mistake and actually hide them all. You wonder. At least we know if that happens, you know what to do. All right, so they're back on here now. But just to show if we do want to add another one, like if I close these out and take these off, if I wanted to add another one of these drawings, so I'm going to take some of these off for now and hide them. If you wanted to add something like this, so let me actually take this wedge off as well. You can go to the left-hand side. And this is, I know there's tons of these things here, but I just want to show one right now. This is called the path. So if you want to draw multiple lines, like a head and shoulders that you've seen here and do or others do before, all you have to do is use this path function, and you can go from one spot to the next. You can see you can go to the bottom and the top, and then go again, like if you're drawing like a head and shoulders, and then you can connect it all together just like this wedge that we did. So basically, once you're at the very end, you just double-click it, and then you're done with that particular drawing. So make sure I've double-clicked it all together. But either way, once that's on there, you can just save that, Greg, and you add that to those layers, and you can move those around and add and remove whatever you like.
All right, powerful tour and probably a fun one as well. If you have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email to td.activetraderlive@td.com. For more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It takes you to our TD Active Trader Live website. Then you scroll down, you find that tab that says Join a Live Masterclass this Wednesday, 2 p.m. The team is hosting an interactive session about TD Active Trader. It's going to give you the know-how to research and zero in on those trading opportunities. Registration is required, and it's open now. All right, gentlemen, before we wrap the show, we want to know what is on your radar, what you're focused on heading in to the rest of this shortened, at least for us, trading week. What do you got here?
Yeah, I mean, I usually cue to economic data, but there isn't much.
Yeah, we're not going to get that.
We're still on a strike, yeah. The government shut down, but one thing that is going to be released tomorrow will be the release of the 7th Beige Book for the year. There's only one more after that, I believe, that is going to be coming out. And again, this is just a reminder that anecdotal information on the current economic conditions from the 12 regional banks we have across the nation. So that'll give some further insights. This week would have been slated for CPI and PPI as well as retail sales. Again, we'll get that pushed back, but it also means October's data is not going to come because typically the way they collect this data is they actually go and out in the field and
you got to do your
collect this data.
surveys, right?
You can't do those surveys, so we might see a big delay there. But other than that, we're back into earnings, of course, Greg, and I still wanted to give the financial flavor, but this time in terms of the credit space, we're looking at American Express, AXP. They're reporting earnings on Friday morning, and of course, for those uninitiated with Amex or American Express, the financial institution mainly known for its credit products and charge cards, available both to individuals and businesses. They offer the premium offerings is what you'd have.
But explain to me as they're the toll booth, right?
Exactly.
Money's here, somebody wants something here, boom, they're the toll booth.
They're the toll booth. They're
along
the
with Visa and
gatekeepers.
some of the other players.
And the other ones there, yeah. So coming into this earnings expectation is 398 EPS, which would mark a 14% year-over-year growth, and revenue of 18 billion, which is 8.5% year-over-year. They've come into, historically, they've beat in the last 4 quarters with an average surprise of 4.6% on the consensus. So there's a lot of expectations. And a lot of that is going to be fueled coming to this earnings with the rise in net card fees and also, primarily driven by the penetration of the premium product. And I wanted to mention that because they just announced the increased annual fee for its Platinum card, one of its most popular ones, by $200. That sits an $895 annual fee, but it's not just about the fee increase. They're also adding some perks to it. You get a $600 hotel credit and a $400 dining credit as well. So really still, giving a value prop for
These
those
days,
travelers.
that covers a meal.
That covers
my wife and I. Yeah. Like a nice meal. I'm not talking about going to McDonald's.
Yeah, exactly. So let's look at the chart and see what's shaping up over here. So again, they've been similar, like you've seen with all charts. They've been on this uptrend here. We've seen a few patterns that have formed. Cup and handle pattern is a very bullish pattern that's forming over here that could imply a breakout. Now, this resistance level, it's kind of a dynamic one where I've drawn connecting just the high so far in the year. It made the previous high. It's now captured. It did actually break above that, but in the short term, it started pulling back now. Now, typically, this is a good sign because anytime you have a strong run-up, you do want to see a little bit of pullback, reset, and then go again. So, but what's interesting is this confluence point again, where the two trends intersect, and we want to see a break of that. And today morning, we just saw a break right above that. So it broke above that short term, and it's back into that long-term trend, and possibly looking to recapture the 335 move there. So coming into this earnings on Friday, expectation is about roughly 2 to 4% move on the stock. Should it have a good outsized beat on the earnings expectations?
Be watching out for that one. Friday morning, right? You said Friday morning for Amex reports. So what about, you got Amazon on deck. What do they got for us?
Yeah, so one thing you can use your credit cards for a lot is Amazon. So you can, coming up to the...
Cha-ching, cha-ching, cha-ching.
Oh, absolutely.
Every time
Coming up to the Christmas season. Today. Yeah, they're always in vogue for sure. But Amazon piqued my interest because of the fact that, if you look at the analysts on tip ranks, there's 44 analysts that are following them, and they all have them as Amazon as a strong buy. So I think fundamentally they've always been looking good this year. And if I jump into the chart, you can see there was some interesting stuff a little while ago, back in around May time frame. You can see that the moving averages, the 21-day moving average, crossed the 50 and the 200. So you can see there was a little bit of a lift in the stock, and then there was a bit of a dip more recently. We can see there's some short-term weakness here, the 21-day crossing the 50. And the reason I was interested in it, though, is because it does have earnings coming up, and typically near the end of the year, coming into the Thanksgiving and Christmas season and things like that, they will have a boost after earnings. So that doesn't happen all the time, but it kind of does have a pattern that way. So that's one thing I was looking at. So I think something to keep an eye on is if we look at support and resistance, you can see it. We've got it around about the 228 to 216 range. So I think if it breaks through that upper resistance here, we could see a big move, but just watch for it as it's going. It might dip down a little bit before earnings, and so there could be an opportunity for a buy potentially. So just keeping an eye on that, and then whatever it does with earnings, if it does come through with a pretty solid earnings report, then that could be a stock to watch for sure.
I just finished my Prime Day shopping, in fact, that just happened. So
yeah.
You have
could
to
be
watch.
a Prime.
Maybe you guys don't have the same problem as me, but as I get older and small things on the screen, I ordered a giant bag of cat food a while ago. We have a dog. We don't have a cat. I couldn't see what animal was on there. And my wife showed it to me. She goes, "That's clearly a cat." And I said, "Well, not to my eyes. It just looked like."
Yeah. They'll let you return it, right?
Actually, they do not let you return pet food, but we did give it to a pet charity, and that cat ate. That was a giant bag. That cat probably ate for a whole year off of that.
Okay.
All right. Perfect. Stories of Amazon cat food, dog food, but that is the show for the week.
It's a wrap.
Thanks for
All right.
joining us today. But on Thursday, we get back to our regular,
We do.
regular cycle here at 10 a.m. Eastern Time. Our guest for TD Active Trader Live on that day is Andrew McCreath, the CEO of Forage First. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching us. We'll see you on Thursday.